All right, so it's 1:30. I think we're going to go ahead and get started. I will ask the presenters to mute unless it's your turn to speak. But I'll start us off by welcoming everyone, especially my partnering chambers. Garrett Sheehan from the Greater New Haven Chamber, Eileen Banish from the Madison Chamber, Jen Hyam from the East Haven Chamber. I'm really happy that we're able to do this together. And a big welcome to Wendell Davis, the SBA Regional Administrator, for being here today. I hope everyone here is doing well. Thank you, attendees, for being on the call with us. So today's format, I have the easiest job because I'm going to stop speaking in 30 seconds and then I'm done. So Garrett Sheehan will moderate our Q&A. Wendell will give us an update on the Small Business Administration programs and answer questions. And then Eileen and Jen will close us out at the end of the call. So please, attendees, feel free to use the chat feature or the Q&A feature to post your questions, and then Garrett will moderate us. So again, thank you all for being here today, and I'm going to turn it over to Wendell Davis. Thanks, Wendell.
Thanks, Sherry, and thanks for this opportunity. And thank you to Garrett, Eileen, and Jen, and all the chambers that you folks represent for doing all that you do and pulling this together. And hopefully I can do a pretty good job of answering the questions that are asked. So I got to be nice to Garrett, I guess. He's the moderator of the questions. Before we get over to Garrett, though, let me just say a couple things. One, you know, we're done what I call round one of the PPP funding, and we're about just over halfway through round two of the PP funding. And I think it's a appropriate question to ask, you know, given that where we are, can we take a step back and ask the question, you know, that threshold question, is the PPP program hitting its mark? And I think if you look at the macro data, we received a lot of data from the round two just last week. And when you look at that data, I mean, there are two, I think, really important things that come out of that data. One, we did see the average loan size go from $207,000 per loan in the first go around, that round one. And we saw that dramatically come down to $79,000 per loan. And even since the data came out 5 or 6 days ago, it's down below $73,000 per loan. And what that tells me is, you know, that concern, and I know we all saw you know, all the media reports, got all the attention about all these big companies receiving these loans. And what that new data tells me is that this is reaching small business in America. This is reaching the smallest of the small businesses. And when you look at if you dig a little bit deeper into the data, what you see is in round two of the 2.2 million applications that have been approved so far, it's a little bit higher than that now. 1.5 million of those have been for loans under $50,000. If you take that up to 150,000 and lower, 90% of all loans are $150,000 or lower. So when you look at the overall data, notwithstanding some of the press reports, this is getting down to Main Street USA, and it is getting to the smallest of small. Now, with that being said, you know, we clearly had some hiccups along the way. There have clearly been some challenges, and we still have a lot of work to do. And that kind of brings me to the second point. The second, I think, takeaway from the latest round of data is that we still have money left. And if you'll recall in that round one, that was a race. I didn't like that race. I know you folks didn't like that race, and certainly small businesses did not like that race. We clearly plateaued with this last data that we're seeing. We still have about approximately $120 billion left. And I think the good news on that front is that over the last 6 or 7 days, the run rate has dramatically slowed down. So, you know, we were at about 125 billion, and 6-7 days later, we're still at 120 billion. So you can do the math. We got a little bit of a runway here to be a little bit more intentional with our outreach and really look in one of the focal points that I've directed our district offices to focus in on is some of the underserved communities and be intentional with our outreach. There's no group too small for us to do outreach to, and we'd ask you guys to help us out in that effort too. One final point, just looking at the macro data too, I think it's kind of important. one, to look at the data and how it's impacting Connecticut. And then secondly, just a little bit of perspective with that data. You know, as of right now, we're right around $6.7 billion of loan approvals under PPP for small businesses just in Connecticut. And that's serving just over, I believe it was right around 20 to 25,000 small businesses. And for the context, in a good year in Connecticut, through our flagship 7A program, we would do about $220 to $250 million over the course of the entire year, helping around 700 small businesses. And that would be a really, really good year. So when you put that into context with what we're talking about now, over under 30 days, getting $6.7 billion into the hands of small businesses, you know, it's really a dramatic program that is effectively in an expedited fashion has gotten a lot of liquidity to small businesses. I think it's a double-edged sword. So when I get a little bit excited that we're having that impact, but at the same time, wow, what a sobering number that there's that much need out there, and how devastating the impact COVID-19 has had on small businesses. But I thank you guys again just for giving me the opportunity to speak with you folks. And we've gotten some new guidance out, and whatever I can to answer any of your questions, I'm happy to do that.
Wendell, thanks a lot for joining us. And for everyone, my name is Garrett Sheehan. I'm the President and CEO of the Greater New Haven Chamber of Commerce and also the Quinnipiac Chamber of Commerce. And big thank you to Sherry for putting this together with all of our chamber colleagues. As Sherry mentioned, keep putting your questions into the Q&A and into the chat, and we'll get to those. Wendell, one question I want to start out with you, and as you mentioned, this was a huge program to kind of roll out. I'm still seeing a lot of businesses that have not even applied. How do you think we can reach some of these very small businesses to get them engaged in the program? We just did another grant fund, and we had a third of the applications said they had not applied for any federal dollars, which was really surprising to me.
Yeah, and anything we can do to help in that effort. I know now that we have a little bit of a runway. Again, I've asked all of the district offices, because we really in this 30 days, and you remember that race in round one, we had no opportunity to really stop and try to figure out, hey, who are we reaching and who are we not reaching? We got time now. Like we did a webinar this morning for some folks in the underserved markets, and we had over 600 people sign up. And I'm like, wow, that tells me exactly what you're saying. There's still a lot of need out there. And as I do these webinars, you know, I'm still getting the questions from sole proprietors, you know, these one-person owner companies and independent contractors. They don't even realize that there's a program out there for them, or they think it's just an employee program. But for sole proprietors and small businesses, you know, your income is also eligible for this program and for the forgiveness. And so anything I can do, that's why I'm jumping on webinars. I got 8 this week. I'll probably do another 8 next week. And again, no group is too small for me. I'm happy to talk to anybody and get out there. And if you have, you know, specific areas in your chambers that you'd like us to kind of focus in on, we'd be happy to jump in to address that. I'm going to give you one example. In working with the FEMA folks, I sit on a committee dealing with FEMA. That FEMA has stood up just to talk about the follow-up to this pandemic and the economic recovery. And they've identified childcare places and establishments as an area where they're not applying. And one of the reasons is because some of the smaller childcare folks, they don't even think of themselves as small businesses. But for our program, they are, and they are, you know, even without the PPP program. So getting out there and letting people know, hey, there's a program out there for you, I think is what we're trying to do right now.
And I should let everyone know, we're going to be talking broadly about 2 programs. There may be more, but really 2 programs today. So there's the Paycheck Protection Program, which we keep referring to as PPP, and then the economic injury disaster loans, which we'll get to in a few moments, because I know you do a lot with that as well, Wendell. In Connecticut, we're getting close to a reopen, that first phase on May 20th. So we're starting to see a lot of questions about people wondering how they use that money, especially if they're not in that first phase of reopening, because definitely not all businesses are reopening. Can you talk a little bit about the timelines for the Paycheck Protection Program? What types of timelines they have to hit? There's the 8-week period. And I also know that the program itself goes until June 30th.
Yeah, I mean, great questions. That 8-week period right now, that is a hard and fast rule. And that 8 weeks is triggered the date that the small business receives that loan. It is my hope, and we're still waiting for the forgiveness guidance. It is my hope that in that forgiveness, there's some flexibility to either look back or look forward with respect to that 8-week period. But given that 8-week period where we are right now, I mean, that money is intended to be spent during that 8-week period that they receive the disbursement. So just to kind of talk about, the intent behind the program, this really is a program where the hope was, and the intent is to get a business from point A to point B. And that's that 8-week period. And the goal is to maintain, we want small businesses to maintain that relationship between the employer and the employee. So that structural relationship is important. So as we come out of this pandemic and we're ready to, to resume, business operations, that relationship is still there. And I think one of the hard things for folks, and this is a little bit counterintuitive for small businesses, is that I love that. We got the sun coming in through the picture, Garrett. That's priceless.
Yeah, they'll be coming in and out.
It would not be a webinar without an event like that. These are going to be some of the great stories we tell afterwards. But I would say that, one of the important things is, and again, this is counterintuitive for small businesses, there is no work requirement. I know that's kind of hard to follow through on, but we understand at the SBA and the Treasury that a small business, because of some of the shelter-in-place rules, they cannot bring their employees back. And we understand that. And again, we want to maintain that structure, that relationship between the employer and the employee. So even though they're not working, we want you to pay those folks. And again, maintain that relationship. You can pay those folks even if there's not work and you're not allowed to bring those workers back. I think it's an important point to stress.
And we'll try to get into some of these detailed questions, because I know we're deep into the program now and people are starting to have specific ones. So a couple here, Wendell, that I'll summarize. First, banks, and I've heard this even from bankers, they're not providing a lot of advice as to the program itself. They will go over what the triggers are for a loan to become a grant. So any place where people should turn for advice on that. And then also there's a specific question here about if you can offer hazard pay. I've heard some mixed signals on that as a way to get your salaries up to 75% of the loan to be able to capture in as much of rent and utilities, but maybe you can comment on that as well.
Yeah, I think how you ended that question is probably going to be indicative of what the answer is going to be. I mean, this is what you got to look at. If you're a small business owner, document everything. So and be consistent. So if over the last year you've had payroll expenses and payroll costs that are X, Y, and Z, the expectation is you're going to maintain that payroll and those payroll costs for this 8-week period. To the extent you deviate from those two things, and you start trying to do things just to get your number up and elevated, you're taking a risk, right? So this is payroll costs. The documentation is important. Consistency is important. And I think if you stick with what you've done in the past and be consistent all the way through, you're going to be perfectly fine with this program. There's the other 25%, which is the mortgage interest, the rent, and the utilities. That's part of that 25%. And just so folks know too, that 75% is not going to be a cliff. And, if you don't meet that 75% threshold, it doesn't mean you're not going to get any forgiveness. There's going to be a pro rata a reduction of whatever that forgiveness amount is. So it's not a cliff. It's important to note that. But also, it's important to know if you're going to play, the more creative you get, just like with the IRS when you're filing your taxes, the more creative you get, the more of a risk you're taking.
And I think for everyone, critical with your bank, figure out, definitely identify what those triggers are on the documents that you sign for the loan to turn into a grant. They should be, from the bank standpoint, fairly simple, right, Wendell?
Yeah, and Garrett, and I missed that part of the question too, is that the banks are holding off on any guidance because they're waiting for us to provide guidance. So I wake up every single morning. I feel like Charlie Brown with Lucy pulling out the football every single day, hoping that we get that guidance, because I know small businesses, I know you folks are waiting for that forgiveness guidance. There is some pretty good guidance already in there talking about payroll and payroll costs, but the granular questions have not been answered. And there's some really good questions out there that I'm hopeful when we get that guidance on forgiveness, it'll answer most of those questions.
Lots of questions. I've seen it already. I hear it every day. People ask me because there's the $600 that the federal government is giving in addition to unemployment benefits. I can give this explanation just from what we've been told by the Connecticut Department of Labor, that they are and will police on when people have been offered jobs back and do not accept them. Now, them saying that and actually doing that, I understand everyone's concerns. The system is overwhelmed as it is, so it's difficult to know how they'll do that. But Wendell, I'm sure you hear that a lot, that people are concerned their employees won't come back to work under the Paycheck Protection Program because the benefits on unemployment are so rich.
Yeah, and an economist would call that moral hazard, where the incentives are actually directing people away from the intent of a government program. There is specific guidance on that for small business owners, and I think it's favorable guidance to small business owners. And what that guidance says is, if the small business owner puts in writing to that employee that the position is available and that the pay is essentially what it was before, if that employee declines, again in writing, to come back to work, then that small business employer, that amount of the loan attributable to that employee will not be held against the small business owner in terms of the calculation of forgiveness. So that's the official guidance. One step further, this is unofficial guidance, so don't hold me to it, even though I know I'm publicly stating this. But there was a recent NAGLE seminar, which is the National Association of Government Guaranteed Lending. One of the SBA folks from headquarters indicated that they expect when the further guidance comes out on this, that the small business owner is going to be able to utilize those funds, so will be forgiven, and they'll be able to utilize that hopefully going forward for other employees or other payroll type costs. Part of the point too is when you look at the existing guidance, for example, one of the FAQs on the Treasury website and the SBA website, it asks a question about payroll costs and whether or not temporary housing is included in payroll costs. And the good news is the answer was yes. And that's something that I would not normally think of as being a payroll cost. And I think it underscores this notion that there's a good faith component to this entire program. And the SBA folks recognize that, Treasury recognize that. And as long as you can document that this is a payroll cost that you're doing in the past and going forward, you're going to be fine, and that portion of the loan is going to be forgiven.
Wendell, we had a question about LLCs and if members can be counted towards the payroll protection program for the loan that turns into a grant.
Yeah, and that's a great question. And that's where I'm seeing confusion, where LLCs and some of these small businesses don't realize that their K-1 income is included, and they can include that in. And that's also on the EIDL program too, which I know you were alluding to, that in terms of that grant, you can include yourself in that component for that grant. But getting back to on the PPP side, there is a great tool on the Treasury website. And if you folks email me, I'll send you a copy of it, but it's on the Treasury website, and it shows all the different categories: the LLC, the subchapter S corporation, the partnership, a sole proprietor. And it shows you how to calculate what is eligible. And it literally gives you details like what line on your tax return is eligible for that program. So I would highly recommend anybody that's in that category and they're trying to figure out what is applicable and what's not, go to that document. And again, you know, it's on the Treasury website, but I'd be happy to scan it and send it to you guys too, which if you guys give me your emails, I'll send that out so you can get it out to your membership.
You know, and I should mention for everyone, because there's lots of questions about how the rules will change. And obviously what Wendell's saying is there's clarifications still to come, but Congress is working on a phase 4 stimulus package. And there's been lots of proposals that are out there right now that would either extend PPP, make some changes to the program, but those are all just proposals at this point and nothing that is set in stone. The thought process right now is late May, early June, that maybe there would be something, but again, that's just still out there. And I'm sure you have a lot of questions that come into you, Wendell, regarding changes that will occur to the program.
Yeah, and that's part of that. The way the changes are being effectuated are through the guidance. But yes, I've seen the 4.0 or 4.5, whatever number we're on. I have seen some of the provisions in there, including, you know, dispensing with that 75%, 25% threshold. But I would, just like you did, I would counsel folks, that may never happen. The program as we have it right now is how you should be going forward and documenting everything you're doing. I think there's going to be incredible flexibility once we do get the guidance, and just be ready to, again, like for an example, on that 8-week period, your payroll period your 8 weeks may be right in the middle of a payroll period. We'll just document that you may have to do a pro rata portion to get the full extent of that 8 weeks on the front end and captured on the back end. Again, get that documentation out now. But hopefully when we get the forgiveness guidance, you'll have more flexibility on things like that.
Wendell, last week we saw a lot of questions come through about taxation and that things that are paid for with PPP could not then be deducted from a business's taxes. Do you have any more clarification, any information you can share with the group? We've seen a few questions on that.
Yeah, and I saw 2 different questions. One, is the forgivable amount going to be taxable income, which I think has been dispensed with since that first came out. But I think there still is this open question, and I've seen various responses in trying to address it, of whether or not something that income or money that you receive that then is forgiven. So there's really no net loss. There's no net expense to you, whether or not that should be deductible. And as I see that, that's the question. And I kind of see it from both sides. Like if you never had to expend the funds because it's a loan that was converted to a grant essentially, then you're probably not gonna be able to get that deduction. I'm probably talking outside my lane and maybe I don't fully understand that issue. And maybe somebody can clarify that if there's a further question on that.
You know, and I keep seeing more questions about, and you mentioned this, paying employees to stay home. And that is one of the options, especially when we're in a situation where you may have employees who do not want to return to work. But that is so awkward for so many businesses. I do just want to re-clarify that because I'm seeing some recent questions on that again, that it is okay to pay your employees to be at home.
That is absolutely correct. There's no work requirement, and believe me, I'm a former small business owner. It is so counterintuitive for a small business owner to say, wait a second, if I don't have work, I can't bring them back. And again, the reason behind it, and I think it helps the answer, is that one of the purposes of this program is to maintain that relationship during this 8-week period. You know, we want to maintain the status quo from point A to point B, that 8 weeks. And again, we don't know what that 8 weeks is going to look like once we get there, but we do want to maintain that relationship, have folks be that employer-employee relationship, have everybody get paid so they're ready to come back seamlessly once we turn that corner and we're allowed to open up the businesses again.
Just a quick question here. Someone asked if vacation pay would be covered. I would assume yes. It's the payroll, whether the person's using sick time, not sick leave, but sick time or vacation.
Yeah, and the only thing yes, but the only caveat I would give, if you're, if it's not something you did in the past and all of a sudden you're starting to throw it in there, just be careful with that. As long as there's consistency and you can document what you've done over the past year and you're just following, your ordinary course of your business, you're not going to have any problems.
Questions about how much to pay someone during the 8-week period if their pay varies. I've seen people who are on commission. Obviously, there's not a lot of sales that are going on right now, or they receive tips. And so how is that factored into determining the payroll?
Yeah, so commissions are included. And I'd have to kind of look at some of that guidance and some of the that's out there specifically. I know generally speaking, they're looking back at that last year. It's an 8-week period. If you have 12 months of salary, you're dividing that by 12 and then times 2, you're doing the 2/12 of that or 1/6 of that. That's that salary component plus all the payroll costs that go along with it. I think commissions will probably be handled the same way. I know that's set out in the guidance and I'm assuming that, so folks should double check that. One thing that isn't in the guidance, so there is some pretty good specificity on there, what our payroll costs. I haven't seen bonuses in there, and I know there's a hope that the guidance is going to address bonuses. I would say if there is no guidance, that if you're doing what you're doing in the past, and that's consistently coming through in what you're doing during this 8-week period, you're going to be fine. But if you're giving a bonus just to get to that 75%, then, you're taking a risk.
Another question here, this is around the people staying home. Someone asked me if their restaurant is closed, they use up the money through June 30th, people are at home. How is that actually helping the small business? I think the answer would be you're able to use a lot of that money towards the payroll, but then you're also going to get the grant to cover your rent and other utilities even while you're closed. But maybe speak to that a little bit, because people are concerned about what to do if the business stays closed during that period.
Yeah, so there is that 8-week period, and then there is that June 30th threshold. So during that 8-week period, you have to maintain those folks on your payroll. And again, they don't have to work. Again, we're just trying to maintain that relationship until we can get to that point B. Once that 8 weeks has gone by, that June 30th deadline has passed, if small businesses are still in a tough spot and they have to make hard decisions, then they're not going to be penalized for that. So, again, we're just trying to maintain the status quo for that 8-week period. Now, there are, as you had mentioned, there may be, that's assuming there's no other modifications to the program coming out of the, any future legislation too. But that's where we are right now. 8 weeks, payroll, make those payments. After that 8-week period, June 30th, if you got to make a tough decision, you got to make a tough decision.
Wendell, have you seen businesses that it does not make sense for them to take the Paycheck Protection Program?
That's a great question. I mean, I think it's hard for me to calculate every individual circumstance, but I think even with the small business owners, I think there's a calculation there. Do you take the unemployment or do you take the PPP? Because in some instances, if you're a really small business owner and your income, and again, it's the net income for a business owner. So sometimes those small business owners are showing losses over the course of the year, especially if they've, invested in some type of inventory or equipment. So I think, somebody has to look at both scenarios, unemployment or, because I'm not sure about Connecticut, but I know a lot of the states have opened up their unemployment benefits to independent contractors, to small business owners. So, that's kind of something that a person has to go through that analysis.
Can you talk a little bit about the 1099 employees? They don't apply for the business's PPP loan, but they can do their own?
Yeah, so they're eligible. And so in that same document I mentioned on the Treasury website, there is a whole paragraph on the independent contractors and those 1099 folks and exactly what they're eligible for and the specific line item in their tax returns that they can claim. Garrett, I would mention one other thing with respect to that calculation of whether or not you should apply for the PPP. One really important thing, and I know you folks work with the SCORE folks and the SBDC folks and the Women's Business Center. You don't have to go this alone. So if you do have questions like that, reach out to somebody at SCORE, the SBDC, the SBA district office, and even you folks. I mean, there's a lot of people that can help you through that process.
Questions about where to go. So we've had a few people here say that their banks are no longer accepting applications. I have not heard of those banks, but that's always possible. So banks is one option, but the amount of lenders was opened up in the second round as well. So there are other choices out there.
Correct. So, I mean, the a number of banks is really extraordinary. The SBA on any typical year would have about 1,800 banks that they work with, about 900 of which are active throughout the nation. That number is now over 5,500 lenders that are out there. And one of the takeaways too from the recent data, seeing that loan amount drop from 207 to 73,000, and that kind of tells me that those community banks, those credit unions, those smaller lenders, they're getting into their communities and they're reaching some of these small business owners, the smallest of the small. But I would say, there probably are some banks out there. I've heard the opposite right now, that most of the banks are, for the first time, opening up to customers that they don't have an existing relationship with. And if you have an issue with that and you still can't find somebody after reaching out, go to the Connecticut district office and they're going to know, some of those banks that are doing that. And I know they're out there. The other thing too is this program has been opened up to the fintechs. So folks like PayPal and Square, there's a whole list of them that are also taking the PPP loan applications. And it's my understanding their loans are they're much smaller than that average loan size. So that may be an option too.
And we'll move to the economic injury disaster loan in just a moment, but what are you seeing as a turnaround time for Paycheck Protection Program loans from the time they start their bank?
Yeah, and one of the hiccups the SBA had early on was that backlog that everybody kind of heard about and felt. That backlog is gone. So I had all my district offices and the district directors poll their lenders in New England. I'm not aware of one single bank that has a backlog. And that's with respect to submitting their application and getting the approval from the SBA. So with that being said, though, some of these banks have done thousands of loans in a short period of time, and they're now closing those loans. And that is a process where documents have to be signed. So they are working through that backlog of actually closing the loans. But we're seeing money at a really hefty clip hitting the streets in New England. So that's happening very quickly.
And Wendell, one last question on PPP, and we'll take some more as well, but someone was asking if the fringe includes pension match payments, also car allowances, employee parking costs, if those would be considered part of payroll.
Yeah, and that's when the more granular you get, the probably less likely we're going to have specific guidance. But I think if you do look at the payroll costs, what's enumerated, it's going to be clear. Retirement benefits are included that just generically. I don't know that we're going to get more specific guidance. If it's a significant amount, you may want to talk to an accountant about that, because I think, just like filling out a tax return, accountant's going to be able to tell you, hey, yeah, this is in the industry norm, or this is kind of pushing the envelope. And I don't want to replace the accountants and attorneys out there.
Well, I every time I turn around, there's a few more PPP questions, so I'll finish these up. One question about the $100,000 limit, how that goes into effect, and I'll give you another one as well. The 8-week period, if you receive the loan in the next couple of weeks, how do you calculate that 8-week period with consideration of the June 30th date?
Yeah, so the SBA, they're going to have to provide guidance on that. They're going to have to do something about that. So they're either going to let people look backwards, or they're going to let people look forward. But right now, we don't have that guidance, but they're going to have to do something with
And the $100,000, it's up to that $100,000 that they're part of the PPP, and then after that, that dollar total above 100,000 is not included. Is that correct?
That is correct. And the forgiveness will not go above that 100,000, and that's, all in, so all benefits and everything else associated with it.
So let's move down to the economic injury disaster loan. Those were out of the gate right away. Those are actually administered through SBA, but there's been a big slowdown. I know there's just a huge backlog of customers right now. What can you tell us about those?
Yeah, a couple points on that. One, that program has been incredibly frustrating for myself. That's been incredibly frustrating for the Connecticut District Office, and I know it's been incredibly frustrating for small businesses. Connecticut in particular did a tremendous job of getting certified, and they were one of the first states in the nation to be certified. I think New England, we had 3 of the first 4 states. And so we have a lot of those early applications that were literally on March 17th, 18th, 19th. We're going almost 2 months back now. And two things happened. And before I get to that though, the ODA, the Office of Disaster Assistance, is a separate division. I know that's not a great answer, but the OFO is what the district offices are under. That's the Office of Field Operations. We have an incredible amount of visibility with respect to PPP. If you call me and ask me, you're a small business owner, here's my loan, I can look it up. I can tell you where you are in the process, what the amount is, how much you've been approved for. We have that visibility and relationship with the banks. We have no visibility into the ODA system. We don't have access to their computer programs or their computer system. So we have to take those application numbers, send them to headquarters, and hope we get an answer out of that. And, to be blunt, the communication between ODA and the field offices has been poor at best. And I think that same communication gap has been with small business owners. So that's being blunt. In their defense, these are the folks that swoop in after every disaster. So they're still dealing with Harvey, Irma, Maria. They're still dealing with loans from the Tennessee tornadoes. They're going to be responsible for the hurricanes that we know we're going to see later this summer, and we're in tornado season right now. That program had existing funding. They went through that funding very quickly, and it was a very small amount compared to the PPP program. So there was a period of time where they just ran out of funding. And the CARES Act 2, that round 2, they did receive a significant amount of funding. It was $50 billion plus another $10 billion on the advanced program. And what we're seeing just right now is that those monies are hitting the street, and we can see when they actually get funded in our computer system. We can't look backwards. We can only see once it's happened. And my district offices are reporting every single day since last, I think, Monday or Tuesday, these loans are closing. And again, we're 2 months, out on that. So I get the frustration. The other thing with the advance, what we're seeing is that's kind of coming before the actual loan. And their numbers on that are pretty substantial. Like they've already given over 10 billion of that out. And I think it's a total of 20 billion. And the way that's showing up, and this goes back to the communication issues I was talking about, it will just show up in your account with no email, no communication. It's just going to show up in your account, 1,000, 2,000, 3,000, whatever you listed as to the employees that you have. And there will be a reference in that to the SBA. But again, it's just no messaging or anything around that. So their volume was unprecedented. They did have a period with no funding. The backlog is there and it's substantial. I'm not gonna sugarcoat it, but we are seeing just in the last 10 days, funds start to hit the streets.
And there was, I think, some miscommunication on that advanced grant as well. It was up to $10,000 and not $10,000. I think initially people thought it was going to be, and some of the language wasn't as clear that it would be at 10,000, but it's based on the number of employees you have. Is that how that is calculated?
Yeah, the statute says up to 10,000, and the way they calculated it and the formula they came up with was based upon employees, including, for a small business owner, that employer. If you're an LLC, I'm sorry, if you're an LLC and you're a one owner shop and you have one employee, it'd be 2.
Gotcha. And I know that program is supposed to last through December, but right now it's closed for new applicants, is my understanding, unless they're agriculture. Do you at some point, once this backlog is cleared, do we expect that to open up again?
Yeah, we do expect it to open up again, but right now you are correct. It's only open for ag-related businesses because under CARES Act 2, they've added ag-related businesses to the types of companies that we can give the EIDL loan program out. And that's the advance and the loan portion of it. One more exception to that is that, and this actually impacts Connecticut and New England because we had some of those early applicants, is that there were it's a small subset of companies that received a loan number that started with 200 or 2,000. It was a 2 series level loan. And if that's the case, you need to contact the Connecticut office or myself, because you got to go back in and reapply to get a 3 series loan number. So 99% of the folks out there, or probably 99.5% of the folks out there, have a 3 series number. If you happen to be one, look at your loan application and the number you were given. If it starts with a 2, give us a call. We need to put you back through the portal and we'll guide you through that process.
Question on the cap. So I believe it's $150,000 now is the cap on these EIDL loans.
Yeah, so there's been a lot of media reports on that. I am seeing loans that are at the $150,000 amount. There has been no official policy with regard to that.
And are there closing costs? And can you explain just the interest level on that? We've got some questions about that.
Yeah, so there are no closing costs for the PPP or the EIDL program. The interest rates on the EIDL program are 2.75% for not-for-profits. We keep talking about small business owners, but it's also the not-for-profits. And it's 3.75% fixed for for-profit companies. And it can go out as long as 30 years.
And just your best estimate for people who are, maybe they got into EIDL on the back end. Should they think it's going to be months away, a couple months, few weeks? What would your best guidance you could give them on that be?
If you've been in, I'm hopeful because we're seeing those early applicants getting funding. I'm hoping you're getting that soon in weeks, not months. But if you're getting in now or you were late, we had somebody from ODA on a webinar this morning, and I didn't like the answer, but she did say 6 to 8 weeks for new applicants.
Wendell, we're gonna wrap up in a minute here. Any last thoughts you want to leave us with? And I do appreciate you taking the time and answering so many questions. Yeah,
no problem. I would just reiterate, you don't have to do this alone. If you have any questions, there's folks at the SBDC, our SCORE partners, our women's business centers. They do tremendous work, and they're helping a lot of the applicants that have questions about whether or not this fits or not. And they can walk you through that process. Reach out to those folks.
Let me hand it off to my colleagues, Jen and Eileen, before we wrap up for today.
You're muted, Eileen.
Here we go. Okay, I'm back. Very much like a meeting we were all on yesterday with the case when Alan Ney, who was the coordinator of the meeting, lost his connection. The same thing happened to me. But thank you very much, Wendell. That was very, very informative. It's so nice to get clear, concise answers. I know there has been a lot of confusion about these programs because they are brand new. We've never seen anything like this before. There's a funny expression from the government, and I'm here to help you. Well, actually, it really rang true this time. It's usually a joke, but you did a great job. Thank you very much. And also thank you to Sherry for pulling this together. And of course, Garrett, great on the questions. And I'll hand this over to Jen Hyam from the East Haven Chamber.
Thank you, Wendell. I know a lot of people have been, it's just, everything is confusing. Everything is coming at everybody all at once. And it was very insightful. For all your information, thank you so much for doing this today. Thank you, Sherry, for putting this together. And thank you, Garrett, for doing the questions and everything. And I wish everyone well, and we'll get through this.
Thanks,
Thank you.
Jen. Thanks, Eileen. Any closing comments from you, Wendell, before we say goodbye?
Yeah, Sherry, just an ask, if there's any group that you want to speak to, or anybody you can think of that maybe we're missing and we can do some outreach, let us know. And if you folks have any questions, shoot me an email. I'll do my best to get the answers for you. And if you ever want to do a follow-up, let me know. Like when the forgiveness guidance comes out, if you're seeing a lot of questions, let's jump on a call and get you guys the answers.
Thank you very much. We do have one last question that's been posted about FICA and Medicare employer costs. Any consideration for that?
All right, I knew you were going to ask a tough one. So on the FICA portion of it, there is a distinction in the guidance about the employer portion and the employee portion. One's forgivable, one's not. I hate to steer somebody wrong. But again, all payroll costs are covered, but I would definitely direct you to the guidance on that because there is some specificity on that.
Okay, thank you. We'll direct her in the right place. Thank you, everyone, for being with us today. We really appreciate it. Thank you to my colleagues, my chamber partners, and thank you so much, Wendell. And have a great day, everybody. Stay safe. Thank you so much.
Thanks.
Take care.
Thanks, everyone.